Hey everybody, this is Bill Black with Flagstar Bank. I want to go over a little bit of information around the mortgage market and the current issues that we have. Having two or three buyers lately, kind of wondering, should I buy or should I just wait a while? I'm kind of a little worried, which every reason to. But let me show you a little bit of data. I'm all about education and then kind of let you guys make decisions around that. So my website is billcblack.com. If anybody's looking to apply, billcblack.com, apply online, and it's very easy digital mortgage. So the conversation came up today around this house, $314,900, 2 bedroom, 1 bath, 900 square feet, cute house, fenced yard, about a 5,000 square foot lot, I think it is, something like that. Close to the freeway, has a nice remodeled kitchen, nice cabinets, nice countertops. It's definitely a starter home at 314.9. This is probably 1750 with 3% down program with good credit on here, and we'll go over that here in a second. Been on the market about 23 hours. Looks like it has almost 200 views already. So really cute house, and that's these are popping up. But somebody just kind of felt like it was overpriced, which I mean anybody looking for homes is always going to feel that way until they live in it a couple of years. I want to show you what the benefit of buying now versus waiting is. So what we have here is I put together a cost of waiting. This is set for Clark County. It's set off the historical appreciation and the future appreciation of what we're looking at here. So in this case, if you bought today at $314,900, you put 3% down, 94.47. Today's rate's 3.99. Now understand that rate was just 3.375. Friday, early Monday, and then all of a sudden the market crashed and everything was a sell-off, and it's just been chaos, right? Well, the rates have gone up, but they're going to go back down because the bond market is so high right now. These will go down. Everything is just kind of in a chaos. But I want to show what just a 0.5% does. I mean, if I showed this, it's 3.375. And this was potentially going to 4.5 in 6 months. It's just crazy. But let's just show you what 3.99 today, because I know that this is what I was able to just show somebody earlier today. Mortgage insurance on this, if you have a 740 or better credit score and a 3% down loan, the mortgage insurance on this program that I quoted was $88 a month for mortgage insurance. Your total payment with taxes and insurance, homeowners insurance is $1,749. And so your cash to close, $13,000, unless we was to ask the seller to pay closing costs. And I would basically really just say that 94.47 would be your minimum amount that you'd have to come in with for a 3% down. We do have some zero down programs, but let's just kind of make it, for vanilla here. So in 6 months, just in 6 month time, a 2.93 is what the appreciation expectation is. That's on all homes. So you're going to have a higher appreciation on these lower priced homes because there's a bigger demand. So the $500,000 home, it might only be 1 or 2%. The $250,000 home that doesn't exist, it's probably more like 6 or 7%. So I'm going to be on the conservative side of what if I wait 6 months? What if I wait 1 year? What if I wait 2 years? What if I wait 3 years based off of history, based off of forecast? What's going to happen? So reality is waiting just 6 months, you're going to increase your payment by $100 if rates go from 3.99 to 4.5. If we see some rates going down to 3.5% and they go all the way to 4.5%, you're going to pay $200 more a month. What is a $100 mortgage payment? So for every 50, you're paying $10,000 more of a home or less of a home. So meaning if you're going to pay $100 more in 6 months instead of 314, if you wanted a 1749 payment, you're going to have to lower your price to 294.9 instead of 314.9. Does that make sense? So we're losing $20,000 of buying power with $100 more of a payment. So just in 6 months, it's $11,885, almost $1,000 a month that you're losing between the appreciation of the home and the amortization that you're putting, because you're paying a mortgage payment out of that $1,749. There's $2,667 that's going to go toward lowering your loan amount within 6 months. Within 1 year, $24,000 of appreciation and amortization is lost. In 2 years, $49,000. In 3 years, $76,000. So huge amounts of money just from the appreciation and the amortization. Now, you might be able to say, well, I'm living at home with my parents, so that's great. If you have that, that is just super awesome, awesome. But if you are renting and rents are going up and you're in an apartment and you're on the third floor and your car parked, a block or two away, people are, you're in a bad neighborhood, you're in a bad school, you have the down payment and you're just struggling to get into the home. You're struggling because your fear that the market is going to drop. Just you got to understand, we are in the most stable market that we have been in the history of my 15 years of doing mortgages. We're making the best loans of our lives for the last 10 years. We have less than, I think it's less than a 1% default rate right now going on in the county. We have Oregon. The Oregon people are coming over here in just droves of retired people coming to Vancouver. Imagine two school teachers making $4,500 a piece. That's $9,000 a month. That's $900. They're not paying taxes if they cross the bridge. Most of them have their kids and grandkids moved over here because couldn't afford Portland. So they sell their $700,000-$800,000 house in Southeast Portland. And they come over here and buy a $400,000 house with cash. And so at the same time, the 29, 30-year-old millennials that both have jobs and they're getting married and they have some money to put down on a home and they're wanting to buy that home as well. So the demand for the $400,000 and under is huge, and it's going to appreciate. I would say conservatively 6-7%. Again, you get to the $700,000-$800,000 homes, they're a little different possibly, but not that much of appreciation. But just in 6 months, 1 year, 2 years, 3 years, look at those numbers. So this is why the right now, what I see in the next couple of weeks is there's people being apprehensive on buying. And what that means, it's almost like I really, really love it when people come to me and want to buy around December, because we always get the best deals. There's nobody waiting in line. It's like Disneyland and after hours or something. So what's going to happen is people are really going to be fearful of going out and shopping and are thinking the market's going to crash. The world's coming to an end. Social media, TV, everything, the world's coming to an end. It's all bullshit. I mean, we got the flu that is going to affect quite a few people, and it's going to go away. And there's going to be within a couple months, this is all going to be in recovery mode. If people hold off on buying right now, the sellers are still going to be selling. Those people are in line. They've been thinking, I'm going to sell. They got another home that they're going to. They got another home that's getting built. They got another. They're moving to Arizona. They're moving out of the area, and so those homes are going to be coming to market. Supply and demand, excess supply. We get better deals. We don't have 10 offers coming in on it. I say today, a good deal is getting a deal. So what's really important is to understand there is ways of looking at homes without contracting any kind of a coronavirus. There's ways of getting videos of homes, and there's ways of putting offers in subject to quite a few things. So don't let fear be a factor of keeping you from buying a home today and missing out and paying $1,000 a month or $2,000. Losing $2,000 a month for waiting 1 year. It's never been a better time to buy. We're going to see rates bounce around all over the place, but what's really important is within the next 7 to 10 days, I see rates dropping again. They went all the way down to 3, maybe 3.25. I was thinking they might hit 2 a little bit. Some brokers are, they might work out of their garage in the middle of somewhere, but their rates got all the way to 2.75. Me personally, I was down to about 3, maybe 3.125 for maybe an hour, and now they went up to 3.99 on this loan, probably about 3.75 with 20% down. So, rates are going to bounce around, but really the appreciation is not. We live in a beautiful place here in Vancouver and Clark County and Washington State, and so just really think about that when you say, well, I'm going to wait and see what happens. It's not a good time to wait. It's the next 30 days is going to be really more about opportunity than waiting. So hope that makes sense to everybody. Again, you can find me over here at billcblack.com. My phone number is 360-910-3290. If anybody has any questions, ever, reach out to me. Love to help you guys. As sooner the better. And have a great weekend. Happy Friday the 13th. My wife and I are heading to Phoenix to buy a motorhome and driving it home for the weekend. So take care, guys.